So we've been talking in the last few weeks about the end of the forbearance period. In March of 2021, the majority of the people that requested forbearances are going to start seeing that the end of the forbearance is here. Right now, people are looking at the end of the forbearance and they're not sure what's going to happen to them when the end comes. I've talked in other videos about the difference between federally backed and private lenders and how the CARES Act, which is the law that protects people in forbearances with federally backed mortgages, how that law protects those individuals. However, it seems that there's still a lot going on with the CARES Act, and there might be some changes and some things that we need to talk about so you understand your rights and what you can do if your bank is not following the law. My name is Diego Mendez. I'm a bankruptcy, loan modification, foreclosure lawyer here in Miami, Florida. As I explained before, I was around in 2008 during the last crash, and I saw a lot of the same problems that people are facing now repeated again. Now, we need to talk about how you can come out of this situation with your home, with your financial situation intact. As with everything in life, when things change, there's always some point of confusion as to what the future will hold. That's what we're facing right now. In a few weeks, people are going to start getting their first bills from the forbearance period ending. In March of 2021, the first wave of forbearance ends will start, and then the next wave will go as people requested them throughout the year of 2021. There's a lot of confusion right now as to what's going to happen in March of this year, when a lot of people are going to start getting their first bills after the forbearance period ends. Now, we've talked a lot about the differences between federally backed mortgages and private lender mortgages. I'm not going to talk about private lender in this video. What I'm going to talk about and what I'm going to focus on are the CARES Act government-backed mortgages. If you have a mortgage that's federally backed, which is an FHA, Fannie Mae, Freddie Mac, VA, or USDA, these banks cannot ask you for a lump sum payment, and they cannot ask you for things that other banks, which are not under the CARES Act, can. However, there is a big problem with the CARES Act, and something that we're starting to see especially with the smaller banks. As good intention as the CARES Act is, and which I believe it is a good law, there is no private cause of action in this law. Now, this is a little lawyer speak, so just give me 2 seconds to explain what this means. This means that you cannot use the CARES Act as a sword, only as a shield. That means that you cannot sue a bank that does not follow the rules of the CARES Act and try to get them to do what you want. This is a very big detriment, especially with smaller banks that tend to sometimes not follow the rules. The bigger banks have so far followed the rules and have done the right thing and followed the guidelines of the CARES Act. However, there is some anecdotal evidence out there. There's some people telling different people about this, that the CARES Act is not being followed, especially by smaller lenders. The biggest problem with the CARES Act is that it does not specifically tell the banks how to handle the escrow. As of now, the majority of the banks have been paying the escrow for the people in forbearance. However, that is not a requirement of the law. This was specifically taken out of the law, which means that it's completely voluntary. And as we know, what happened in 2008, a lot of banks decided that things that were voluntary were not in their best interest, therefore they stopped doing it. There is some anecdotal evidence out there of banks not following the rules of the CARES Act. This is something that is very, very troubling, because this law was designed to protect struggling homeowners. And a lot of times people stop paying their mortgages thinking that they're going to be getting help, but actually they were putting themselves in a very bad position. This same thing happened in 2008 when the banks told you to stop paying your homes to apply for loan modification. A lot of people lost their homes because they followed the directions of the bank and did what the bank told them, and then they got themselves in a hole that they were not able to get out of. Forbearances are notorious for this type of thing. A lot of times people are put into forbearances without even them asking for it, and when it's time to come out of it, the bank asks for a lump sum. The CARES Act specifically prohibits this. If your bank is federally backed, they cannot ask you for a lump sum. However, the CARES Act does not tell the bank what they're supposed to do with your escrow. So in theory, while they can't ask you for a lump sum, they can ask you to pay back the escrow in a very short period of time. The escrow can sometimes be 60%, 50% of your normal payment. So even though you're saving money by not paying the principal and interest, the escrow portion could add up to a significant amount of money, especially if the bank's asking for that in a lump sum, or if they're asking you to pay it back in a very short period of time. It's very, very important that you pay attention to what the bank is doing with you at the end of the forbearance. When the end of the forbearance comes, this is when you need to have all of your alerts on, and you need to be looking and reading everything the bank sends you so you understand what's happening. Now, not to scare anybody, but there is a way that you can limit the tension and limit the confusion of your situation so that you can get out of this situation and get on with your life. The number one thing that you need to do with a bank is communicate. Do not ignore the bank. Nobody wants to call their banker. Nobody wants to talk to somebody that they don't know over the phone about their private financial situation. That is one of the worst phone calls that you can make. I understand. I deal with this every single day with my clients. It's a psychological thing. A lot of people do not like to talk to their banks. I get it. However, if you don't talk to the bank's going to do whatever they want with you. So you need to make a phone call. You need to be nice, but firm. You need to make sure that if your house is covered by the CARES Act, that the bank is following the rules. So when you're coming out of the forbearance, you need to call them, communicate, and then get everything in writing. When Ronald Reagan was negotiating with the Soviet Union at the end of the Cold War, he said, "We can trust, but we must verify." You need to do the same exact thing. Trust, but verify, so that you can come out of the situation without a huge bill at the end and a huge headache that might lead to the end of you owning your house. So it's very important that you communicate and that you get everything in writing. And when you get the thing that you asked for in writing, read it, look at it. And if there's a problem with what they sent you, immediately call them. Do not wait until that problem festers into a situation where you're not paying back what you're supposed to pay back, and the bank is charging you late fees and putting you in a position where you cannot pay your mortgage anymore and you lose your home. Nobody wants to spend an afternoon on the phone talking to some banker about your mortgage. However, spending the 2 hours or 3 hours that it takes to do that and the stress it takes to do that can possibly save your home in the future. I cannot tell you how many people I dealt with in 2008, 2009, 2010 that could have been saved with a simple phone call at the very beginning of their problem with their mortgage that festered into a situation where foreclosure eventually happened and they lost their home. Do not let that happen to you. Make sure that you communicate with your bank. Make sure that you get everything in writing. Trust but verify. And I promise you that if you do these things, it's not going to work in every situation. There will be people who will lose their homes because of the forbearance problem. I guarantee it. Because there are too many people involved and there's too many millions of people with different situations. Every situation is different. And a lot of times there's really no way to save a house. However, many times you can save your home by simply doing what you're supposed to do and keeping yourself informed and not giving up. My name is Diego Mendez. Like I explained, I've been an attorney in the Miami area since 2008, where I started representing individuals who were in foreclosure, in a bankruptcy situation, and also required loan modifications. I've been helping people both in English and Spanish for many, many years here in the Miami area, and I hope that my videos are helping you understand what you can do in this forbearance period to come out with your home and your sanity intact. Please subscribe to my channel and like my videos so I keep making these videos, and I can assure you that there will be new things to talk about every single week. Every Monday I plan to do a video that will address the situation that's happening in the United States with forbearances, loan modifications, short sales, and other things that related to real estate and your personal finances. Thank you very much.